Hey, hi. Morning, everybody. I think, sorry, you'll have to deal with me all over again. I'm still here. So I think just wanted to get on to the next session. We have designing scalable and resilient payment infrastructure. We have a great team of people who've been doing this forever in their own capacities in their banks and institutions. I think just as we had a little bit while back, the volumes in India, right? The UPI or IMPS, all the digital transactions have grown significantly. We become the largest transaction processing country. This has happened just in the last 8 years. If you see the transactional growth in the Western world, you would have had Master Visa. These are 50-year-old organizations which have done extremely well across the globe. But in the last 8 years, just with a couple of products, the numbers have soared to unlimited numbers in India. And this has been, adoption has been across all genres, all rural, urban, etc. I think that basically talks about being scalable. So as banks and financial institutions, it is going to have a lot of impact in terms of how you deal with that. And then how do you allow for resilient, secure, fast-paced just processing, right? So the customers have the most and the best experience. With the thought process in this discussion is to try and delve into these changes. There have been obviously legacy systems which have become cloud-based. There have been disaster recovery, security, compliance that has come into the picture. I think the idea was to look at maybe 2 or 3 things, and thought we'll keep a free-flowing conversation. And the idea was to give as much inputs. You have the best people here, so we could actually hope for the information to be free-flowing. Just on the existing volumes, how do you manage scalability? How do you manage the efficiency? Secondly, we could look at maybe from a new products that are being launched. It's cross-border. There is even things about UPI International, CBDC. Look at that side of it. Third, we could look at maybe the interoperable, how to take it interoperable, right? There are CBDC, e-rupee, UPI, all sorts of things, right? So without further delay, I think I'll maybe start around the questions. And sorry, we had Rajesh, but he couldn't make it, so I'm going to not ask his questions to you. But Tejas, just from the resilience in payment systems, right? Particularly from a peak transaction, you come from a great database set of background. How does an institution plan for it? How does it actually work? How will they manage it, and how do you mitigate those risks is what maybe we could start with. Over to you. Actually, we could do introductions first, and then we could go with that. Sorry. Thanks.
Sure. So thanks a lot, Satyajit. By the way, I run the APAC business here at Cockroach Labs. We are a relational database that we built ground up. One of the youngest relational databases. There's a lot of innovation which has happened on the NoSQL side, but if you look at some of the legacy monolithic databases, they've been around for ages. Our goal was to build something ground up, which is fundamentally operating like a NoSQL database from an architecture standpoint, but give you all the benefits of a traditional SQL database. So that's the exact problem that we are solving. Just want to add what Satyajit started, right? That even though we've become the largest country from a transactional standpoint, today we are still the 5th largest economy in the world. And our aspiration is to become the 3rd largest economy. So if you believe that we've been there and we've seen the scale, I think we've just scratched the surface and the scale is yet to hit us. If you're going to become the 3rd largest economy, now just imagine the number of transactions that are going to happen. So someone said something very profound at one of the conferences was, you cannot keep building larger and larger building in order to reach Mars. You need to think out of the box. You need to really think fundamentally from the scratch itself. And that's something that we're building. Our goal is to build something which is highly resilient, highly scalable, and distributed, which can really scale out in order to meet the demands of tomorrow.
Sure. Sir, I'll just let you introduce yourself and then.
Good morning, everyone. Thank you, Satyajit. Myself, Harvinder Singh, I'm taking care of the information technology set for the Capital Small Finance Bank. Coming to the topic, as Satyajit said, that the era which we are heading towards is digital with the new age customers. The upcoming generations are not onto the same thought process which we or our immediate generation is carrying. So considering that standpoint, our digital infrastructure has to be in a shape where it can have the potential inclusion of the segments which are not yet touched upon, and I would say the obvious segments are the underlying technology capabilities, infrastructure capabilities to scale up based on the sudden spikes. All that is going on for last long time. So we as a kind of segment are always thinking about those things. That is one thing. But going forward is once we achieve all these capabilities from the tech standpoint, the ability of the ecosystem, then the important factor is the utilization of, the optimized utilization of this ecosystem so that the max possible inclusion can happen. The customers, the citizens of our country as well as other peer nations may participate and leverage these capabilities. Thank you.
Hey, hi, this is Venkat here. I am from Karnataka Bank and I'm the Chief Information Officer for them. So when Satyajit talked about legacy, so we are one of the oldest banks in India, 100-year-old bank. We are older than even the regulator. So the oldest private sector bank, one of the oldest private sector bank in India. And the topic, as he said, legacy and how modernization is going to happen. So our theme in the bank is, startup at 100. So we are literally reforming the banking ecosystem in a different way. So we were discussing in the morning with my colleagues and with Satyajit around and a couple of more people around in the lounge, and we were discussing banks are today the way in which banking is. Tomorrow the banks will become solution providers. So when I'm talking about they are going to be software companies tomorrow, and they are going to have, so we are going to be OEM of financial products, and for that, what does that mean is it is going to be a different scenario if you are not going to be in that direction of innovation, and gone are the days where my children or the next generation are ever going to come to the bank branch to do transactions. So we need to be aware that the branches growth will be there, but it's going to be contained to the next 4-5 years. Post which you will see today itself, the footprint in branches are very bleak, and even in the except for the state-run banks, I think most of the banks are struggling to get people in the branches, though they have a huge customer base. So it's all about innovating products, and when we are talking about innovating products, how are we going to make it scalable? How are you going to make it more resilient? How are you making the new customer base being attracted towards your brand? That is going to be very important. And finally, what is constant re-engineering and approaching the problem both on the functional side as well as on the technology side, and the concepts which we have today, the run the bank, the change the bank and grow the bank kind of a thing, everything is getting blurred now. If you really look at it, the lines are getting blurred. As you say that the development methodology are getting with DevSecOps coming in and other things, that getting blurred. Even the concepts are getting blurred in a different way. Newer way of maintaining applications are going to come in. Obviously, people are looking at site reliability, engineering, observability, and other things. the theme will be how are we going to hollow the core. That's going to be a bigger challenge. How are we going to make sure that the core will no longer will become the core. The core will become the API banking layer. The API banking will become the most critical component of the bank, and rest of the bank, that will be the core at this given juncture, will become more of a object store for all the data store kind of a thing. So things are changing big time. 5 years from now, when we are sitting in this table, we will be discussing a totally different concept. We will be almost like a software company. A bank will become a software company who will be providing solutions to the retail, to corporate. And if you do not do that, the banks will cease to exist. That's what my think is.
Sure. No, thank you so much for the insights. And already, I'll hope to have a job after this, but since banks is software. So I think Tejas, just one quick one. Because of your experience on the database side, just wanted to understand from, we talk about resilient payment systems and we talk about security threats, we talk about declines and all sorts of technical terms, right? And I had a very interesting conversation with you that you had thoughts around how this could be mitigated or just taken care of by the institutions, financial institutions. So if you could throw some light on that, that'll be great.
Sure. So if you look at the pre-COVID era, right, most of the end customers and consumers were totally okay if the banking partner that you're banking with would be taking a 6-hour maintenance window or an 8-hour maintenance window, etc. What has flipped after COVID is the loyalty has vanished and it has turned into experiences. You have one poor experience, you have one outage, and things go haywire, and they go on social media, etc. So it's very important to ensure that systems are resilient, they're always on. And the other fundamental change which has happened is the regulators are taking keen interest. If you look at the amount of transparency that is there on NPCI's website around things like TD, BD, which is basically technical declines and business decline, they're just putting it out there as a scorecard. And the banks, what the transparency is bringing in, that it's keeping everyone on the toes. It's of course keeping the solution providers like yourselves on the toes, that you need to ensure that the banks that you are supporting are always up and running. It's keeping the banks on the toes. And now if you see, taking it a step further, in some of the master circulars, the regulators are providing very accurate guidelines on what is expected as soon as there is a technical glitch. So basically what has happened is, from a disaster recovery mindset, we have moved to an operational resiliency mindset, accepting that the failures will happen, and those failures could happen at any layer. It could happen at a machine layer, it could happen at a cloud layer, it could happen at a data center layer. But how do I reduce the blast surface? How do I reduce the impact of that failure? And how do I recover quickly with as minimal downtime and as minimal data loss as possible, is the state of the art. So always on systems are kind of the new thing which is here to stay. We are also seeing a lot of public RFPs which are talking about active systems, which basically means that it should be able to survive a complete data center failure as well. So I think there's a lot of innovation going on that front in order to build an always on kind of a system. Right?
So just to add to a very interesting concept which was brought in now. So when I talked earlier about, when he talked about, the regulator being so aware that, the downtimes have to be very slow, very low, and, we are getting measured on each and every transaction which is going through. The challenge for me as a CIO or a CTO of an organization is, when you're talking about this, that, everything has to be on. Today, in my bank at least, there is a freedom for me to do work the way in which I want to do, and it's more of an entrepreneurial kind of a setup. So in other banks, I will not be exposed to the customer. So so I'll just give you a bit. There is a customer of mine who's an HNI customer. He wants to do Brahma Muhurtam time. He wants to do that is at 3 a.m. in the morning. He wants to fund transfer NEFT transactions, okay. What happens at 3 o'clock in the morning is where my cusp of my end of day of my core banking happens. If the core banking, so generally the core banking end of day takes 2.5 to 3 hours. That's the minimum time period which is required for that. Just look at it. The person has to do a trade at 3 a.m. in the morning, and he has to complete that NEFT RTGS transaction. And at that point of time, there is also, we expect that, at that point of time, we can move the transaction to a CSIS mode. That is more offline kind of a mode, and then we do the transaction. That is what we thought, we will do, we will take that. But the pressing demand of this customer made us think about our strategy. So we had to now relook at our, the end of day, end of month or end of quarter kind of an activity in a different way. So we had to look at this 3-hour window to crunch it down to 20 minutes. And even in that 20 minutes, I have to keep my core banking on and do all kind of transactions at that point of time. That is the kind of pressure we are talking about when you talk about UPI transaction failures or NEFT. People want to do transaction at any point of time, and you have to be ready for that particular transaction. Otherwise, it gets reported as a probably a concern to the regulator or anyone on earth. So that's the challenge we are facing as a bank. And what is happening, Satyajit, is also about this is getting measured, and during COVID times, as a CIO, we had pressure of even answering to the government, because the subsidies which were given had to be disbursed to the undertrodden or the people who had to receive the benefits. And they used to call us on a daily basis to understand whether the disbursement of money had happened. The government the finance ministry people used to call us, and not to the CEO or any CIO will be called for ensuring that the money has been disbursed. That is the kind of pressure we are talking about when you talk about systems being available, and you are being questioned for each and every aspect of business being available for customers. So that's what we are talking about in terms of regulatory controls, oversight, and pressure of being resilient at every point of time. So
thank you so much. Thanks. So, Harvinder sir, just one quick question to you as well. We've been looking at scaling payment systems. There are obviously resource constraints, so you can have internal hardware, infrastructure, connectivity, resources as such, right? So I'll just club two questions into one. One is, how do you really see this being managed by a bank? There are small finance banks which have come up. The idea is transactional. Volumes is what typically will drive the growth. And on the other side is new products are being launched at all times. So how do you balance it out with existing efficiency or resource management, and then you have a CBDC or a UPI comes up with multiple products, right? How do you manage that, and what is the way to do the best? I mean, what's the best way to do it?
Satyajit, I think this question poses a different kind of reaction or different kind of arrangements considering the size of the enterprise financial institution, because with the mid-size transaction loads, there are different scenarios. With the higher side volumes, there are different. But considering in generic, what I think the underlying infrastructure has to be in a balanced mode. Means I can't say that it should be totally to the microservice-based, cloud native and all that, because that has its own maintenance requirements, the high cost initial investments, and the from the distributed ledger point of view, the data integrity, consistency, maintenance requirements goes high. And from the existing setup wherein on-prem or considering the monolithic based architecture. So it has its own kind of concerns when it comes to the scalability or efficiency terms. So what I feel that the financial institutions, specifically institutions like us, we have to keep on reviewing ourselves continuously with a shorter time so that we can identify the proportion of the balance of this overall setup. Means it should be a kind of hybrid. It should not be posing towards any direction without the alignment between our business needs, our customer needs, all that, and in addition to this transaction load. So I think periodic reviews, what our ecosystem is demanding, and evaluating with the current setup architecture which we have implemented, and going forward making those tune-ups periodically may help everyone.
Sure. Thank you so much. I think Venkat, just extending onto this, similar, growth, similar resource allocations, but there are always the security and compliance side of it, right? As a CIO, I'm sure you have to go through a lot of those audits, and then you also have the pressure of delivering the latest and the greatest to your customers. I think to keep them active, like you said, the next generation doesn't wait for any new thing that comes up. They want to be a part of it. So any thoughts on the compliance and regulatory or security side of it for the new launches?
It's when you are in a business of banking, I think, we as CIOs or CTOs are responsible for, and we own for the customers of our bank and the shareholders of the bank, we own the technology risk and any kind of a transaction risk which happens into the bank. So when you talk about all these things, when it based on the couple of years, there have been a lot of learnings which have come, wherein banks have been stopped from doing businesses, right? That will be distribution business on digital side. Some people have been restricted on KYC norms, other aspects of it on the know your customer kind of an activity. The most important thing is your ORMC, or the Operational Risk Management Committee, becomes a very important role. And when you are skipping those important risk committee meetings and taking a product and you want to do an innovation on the product without understanding the underlying risks associated with doing an innovation, that's where people or the institutions have landed up into trouble. It is also very important that whenever we do probably a game changer kind of an approach, where you want to do a disruption on a particular business proposition or acquisition strategy, it is very important that you should take the regulator into confidence first. There have been instances where people have gone through the ORMC, but since they have not bounced it off to the regulator, the regulator has taken its is very wary of doing certain kind of transactions. And if you are able to take him along in the journey, I think the journey has become, you will be absolved from a lot of regulatory related questions later. So, and if you are able to build that part of it, and if you are able to get the feedback from the regulator, from the ORMC, and build that as a part of your journey itself, you need not do a lot of control reporting and exception reporting later. Right. So you can build all those controls when you design the system. So I feel, yes, we owe it to the customer, we owe it to the regulator, and the only way in which you can avert any kind of a regulatory or a compliance breach is by taking everyone into confidence before we even roll out a system.
Sure.
One more
Sure,
thing,
sure.
as Venkat said, we are running with the normal flow for the product loans. In generic form, the business requirement specifications are defined, and then it goes to the system design and then development, UAT, risk assessments, all that stuff is going on. Here, what I feel, there are some other allied components, as Venkat said, ORMC is one of that. The compliance divisions are there. Being a part of the IT team, I see the all directly allied or connected teams, maybe CISO team, maybe data enrichment teams, those are connected. Those play their role at the relevant stage when it comes. But the other teams, such as these compliance teams from the operational risk, from the customer service kind of issues, those are not participating during this product rollout process flow. So what happens when it comes to a maturity or at a rollout stage and very initial pilot mode time, there are certain kind of observations which pose kind of fundamental questions onto the solution designing part. Right. So what I feel now the financial institutions should have to review the important components which should participate during the whole process of any product designing, evaluation, not only from the regulatory perspective, because regulatory says outlined concept or framework about any topic. Their banks or institutions' own teams are reviewing those components. But having all the peers with this one product rollout journey may help in reducing TAT and the post-rollout issues on those kind of things.
Sure, thank you so much. Tejas, I'm going to just come to you, but maybe you all can add a little on that, because it's a little generic question that I had, which typically key advantages of cloud-based, cloud-native architectures that have been now proposed. I'm sure in all of your organization there has been always this conversation, but maybe starting with you, how can just financial institutions ensure the scalability, fault tolerance, and the benefits of just a cloud-based side? So we'll start with you and maybe we'll look for inputs.
So this morning, Venkat and I were just discussing the same thing. I think there is some sort of nuance to cloud native. A lot of times when the word cloud native comes, we expect that it means a public cloud like AWS, GCP, or Azure. But what cloud native essentially means is I should be able to move my workloads between a private cloud and a public cloud whenever needed. So that agility should be there. And most of the large institutions, the way they are making decisions are all based on business interest. So their question is, am I going to get a price to performance benefit if I'm going to move this to public cloud? And if I'm not getting that, after the app is getting stabilized, we have also seen a lot of reverse migrations from public cloud to private cloud. So having that ability and agility at all layers, including your database layer, including your infra layer, to switch between different platforms to take the benefits and advantages of the new and upcoming innovations, whether they are happening on the public cloud side or the private cloud side. I think that's one key fundamental change that we are seeing with very, very large organizations at large.
This cloud has always been a hot topic for the last 6-7 years, and people have gone through this journey of adaptation of cloud and then coming back on-prem. Many of the banks have done this. They have burned their fingers in terms of going ahead with the cloud journey and then looking at the cost parameters coming back. There is a thumb rule which probably we have adopted, wherein it has worked for us. Anything to do with the customer. Anything to do with the customer journey in terms of whenever any application or a business application which is facing the customer, if I'm able to bring that into public cloud or a private cloud kind of a thing, it works fine, because then anything to do with data per se, which is intrinsic to the bank, anything to do with a banking transaction, that will be in-house. when we do any kind of a development, for example, today, so we have a legacy. Okay, when we talked about legacy, we had around 53, 54 applications or more, which are the surround systems for the bank, which are being used by various departments for doing some kind of an operational efficiency, productivity kind of a. What we are planning to do is we are trying to modernize this by crunching these applications to one. Gone are the days wherein a bank will be judged based on number of applications. Tomorrow, valuation of banks will be based on how lean have they set up their infrastructure. Main thing is, please try and understand, number of applications to support is adding to your operational cost of the bank. And if I'm able to bring down the number of applications to the bank, I can give that whatever I'm paying to a service provider, I will be able to cross leverage to my customer. And that percentage, if I'm saying, I can build into my customer interest rate, either on the loan side or on the liability side. I'll be able to pass on, and that will be a differentiator factor for the next generation to be banking with you. And that's how, so today the footprint of any organization is in terms of, large organizations, because they have a CRM, they will have a BPM, there will be some other tools which for launching one product, they will have to have a footprint on at least 10 other applications. So one transaction actually leads to at least 10 other sub-transaction in subsystems. How can I bring down that footprint and how can I optimize that footprint is what the challenge for a CIO will be. And that's how I'm going to be measured in the future. The matrices are going to be driven on that. And that is the reason why I feel that this journey of whether it is a cloud native or is it going to be in-house is going to be based on the number of footprints and where that footprint is all going to be. So the footprint may start in a cloud but end in on-prem. And it will always be a hybrid from a perspective till the time the cost of cloud does not or becomes equivalent to manageability on the on-prem side, which is today at least a 3x or a 4x difference. If it gets to a like-to-like, even for a 0.7 or a 0.8 kind of a basis, if it goes to that level, is where you are going to be looking at people moving again to the cloud side. Till that time, I think the hybrid cloud is going to stay.
Just want to add one minute to Venkatesh's discussion. So referring Venkatesh point of view on the consolidation of the systems or service. So I would say for the smaller or medium-sized institutions, there is a privilege that we have a chance to think from this standpoint because we have not grown up to that level. At our bank, we would have done certain kind of reforms pertaining to this. Just for example, quickly, that all, suppose our core system and the allied channels, mobile banking, net banking, passbook, other services which are dependent on the core. Means if core is not there, these channels cannot serve the purpose independently. So what we have done, we have tried to identify the core in tech components so that rather than having those independent deployments and then coordinating with each other and the people maintaining individually for those different applications, we have come up with the virtualized environments with a form that the distributed focus to maintain 5 systems comes to one consolidated environment so that the number of heads, so it helps us to reduce the monitoring efforts because it is watching to a single tech stack. So these kind of benefits we can leverage. And definitely this is helping in many other forms when it comes to the consolidation. Means the ASTs, VAPTs, all that stuffs get to the lower side and fixing to a basic. It is kind of a reusability of the tech stack based on the business requirement.
Sure. Thank you. Actually, we're almost on time up, but maybe last one thought, I could maybe give 60 seconds or maybe 120 seconds for each of us. We couldn't really touch upon a lot of the interoperability. No session seems to be complete without talking about AI, but we'll not go there right now. Just about CBDCs and even the AI side of it, just maybe a quick 20-second, 30-second inputs on how do you see the structure, the architectures changing for the newer products that are coming in. It could be cross-border, could be any of these, right? Thanks. I'll start with you and then maybe just wrap it up accordingly.
Yeah, I think every month NPCI makes a new record of the number of transactions they are doing. So it's all in all a very exciting time for all of us in the industry, whether it's a solution provider or a database company or even the banks. Because what we've seen so far is scale, but the astounding amount of scale is yet to come. And I'm sure there are a lot of innovations which are going to take place. CBDC is, of course, yet to realize its full potential, but really love the whole concept about it, that anonymously there can be a transaction between a person to another person without involving intermediaries. So this is our form of regulated blockchain, which doesn't really get monitored by any third party.
In short, I can say we have to see the readiness of our existing payment systems, SFMS-based products, UPI, IMPS, all that should be kind of eligible for this interoperability when it comes to CBDC. Secondly, the AI is definitely going to play a role since it is going to be the digital ecosystem. So the AML, KYC, the fraud detection, risk monitoring, those kind of components can be leveraged with an optimized deployment approach. So the readiness should be there, adopting the international standards just to be an eligible participant to this space. This is what I can say.
Thank you.
Agree with both of them in terms of CBDC and so AI. For me, artificial intelligence is now the use cases are yet to be discovered, rediscovered. The contours have to be set. That whether data is coming in, fine. What is going out is it's like a deep seek, right? In terms of whether we don't know what is happening or we are oblivion. So we have umpteen instances of network equipments which were coming from outside the country being deployed, and most of our data being available in some other country, right? It's a bound, it's like drawing your contours on what you're doing, being very aware of what you're doing. AI, obviously, AI model for India has to come in if you want to succeed. And in AI as well, if you are able to build your own contours and build your own algorithms by which we can do a bit of predictive analysis, predictive based on the data which you already have or in the public domain, and then bring it out, build a guardrail around it. There are many use cases which you can come across on the product side. You want to have product innovation, you will have credit innovation in terms of know your customer much better. How can I use predictive analysis based on publicly aware information on his social media footprint and other stuff. If you're able to build certain contours around it and then have decision making done on it, that's one part of it. The one relevant for us as CTOs and CIOs is on the SRE side, and site reliability engineering on the observability side is where how can I catch or for the CISO, how can I catch an abnormal transaction or an abnormal behavior of probably which is being seen in the system, and how can I catch true positives and leave aside false positives. That is going to be a very, very critical, because even you can miss out while looking at a monitoring screen. I can miss out on various aspects of it. So many alerts are going to come into the system because of number of transactions, number of logs which are getting ingested. How am I able to catch the right kind of transaction and do a forensic over it is going to be very critical. So that's it.
Sure. Thank you so much. I think, I don't know if we have time for question, at least one, or do you think we're way beyond? Yeah? Okay, sounds good. All right. So I think just wanted to thank the guests. Thank you so much for all the inputs, I'm assuming, and hoping that it was really useful for the people around. And, we've had a fair mix of fintechs, banks, institutes, all of here. So just thank you so much. Appreciate and look forward.
Thank you.
Check. Yeah. Thank you so much, everyone. We would love to appreciate and acknowledge your presence here by presenting a memento. Requesting Vikrant sir to kindly do the honors for us. Thank you. Ladies and gentlemen, a huge round of applause for all our panelists here, our speakers, and of course, our moderator, Satyajit sir. Thank you so much. Thank you, everyone. A quick picture, requesting everyone to squeeze in.